the first thing first, what is the gap of aggregate demand being lagging behind? So my calculation is if you look at the property investment, it basically dropped about $1.5 trillion US dollars, which basically is about a 4 to 5% of GDP. On top of that, when people's net worth is down, their tendency is to save more and spending less. So there's another secondary impact of this property market meltdown because people are now trying to save more and spend less in order to get back their old net worths. So that's why you can see the spending is also falling apart. So combined, I would probably say the gap, the demand gap, the aggregate demand gap is probably around 4 to 5% of GDP, which basically saying so you need at least 4 to 5% of fiscal stimulus to get the thing really turn around. That's why I totally agree that has to be huge, has to be massive.
Okay.
Just think about the property alone is about 4 to 5% of GDP, and that investment is not coming back.
So this isn't necessarily a David Tepper buy everything China-related moment, though, is it? We have to be selective. No, so China internet stocks make sense at the current levels, but property developers on the equity side or the credit side, you want to still stay clear?
Absolutely. I think even though they had a reflexive rally, I don't see the viability of the Chinese property stocks. Think about it. You know, in the United States, about what, 2,000 real estate companies, property developers. In China, we still have like 120,000 of them. I mean, most of them have to go bankrupt. So that's what I'm saying. You have to be very careful. You have to be very, very selective in terms of what to buy. But I'm looking at the index as a whole. The index as a whole, especially when you talk about the CIS 300, I think the market as a whole should be the vehicle to play this stimulus package. So, you know, I'm not a sector guy, but I think from the macro perspective, the Chinese equity market as a whole is undervalued, discounted a lot of bad news. And I think the fiscal and monetary stimulus this time around, they are serious. They are much more serious than any time before. And I think the Chinese government is panicking. And all of that basically tells me that the stimulus package will be big enough probably to put a real floor underneath the Chinese equity markets.